Hey, good morning, everybody, and welcome to On the Open. We're going to take a look at all the European action that has happened so far in this session here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And the ECB, the European Central Bank, has spoken, and they are going to hold firm on continuing their policy as far as monetary infusion. They are going to continue with the program of infusing 80 billion euros per month. Now, the expectation is, though, that they will taper that to 60 billion as of April 1st. We're going to wait and see on that one. But the European markets right now, well, they're reacting accordingly. As a matter of fact, if we take a look at the 10-year bonds of the three main country indices, let's take a look at the German 10-year. You can clearly see right now that the German 10-year is down about 44 cents at 98.40. It clearly has broken support on the 50-day moving average. It's been trending down, especially as we started to get the German election news. Then we also will get anticipation of what's going to happen with the ECB. Well, they're going to hold firm with the policy through the remainder of 2017. And as I quote, they said rates to remain at present or lower levels for an extended time and well past the horizon of the net asset purchases. That's a direct quote from their statement. Now, with that being said, you see the German bonds down. They have broken the 50-day moving average. There's a lot of resistance here in the German bond markets. That money is moving out of the bonds. Let's see if that actually is going to help the German markets going forward. We're also looking in the UK. The UK government 10-year bond is down about 16.5 cents at 130.30. You can clearly see, though, it has been performing much better. Obviously, with Brexit and triggering Article 50 sometime this spring, the Scottish trying to disassociate themselves with the UK so that they don't have to exit the European Union. A lot going on there, but the bonds have been holding up quite well above that 20-day moving average. That means that capital is staying in this fixed income area. We're going to watch this one very closely because the UK FTSE is actually down this morning, but we're going to need some sort of catalyst, and that money is going to have to move out of the safety of the bonds and into the securities if it's going to catalyze the markets. And then France. You can clearly see the French 10-year. It did a similar action to the German. Broke through its 20 and 50-day moving averages. The bears, with the French 10-year trading at 92.59, down 22 cents, clearly in a bearish trend. Let's see if that money is now rotating out of the bonds with the extension of low interest rates in Europe, and the bonds are reacting accordingly. Taking a look at the major indices, the DAX trading right now at 11,960. Now 11,959, down 7. You can see that the bullish trend in the equities is holding up. That money that might be rotating out of the German 10-year, this could be actually benefiting the German markets. Let's watch a challenge of the 20-day moving average of 11,878. A challenge here, then you're going to get into this area where if you're looking for exposure in Germany, which is one of the largest economies on the European continent. This area right here, basically between 11,878 and 11,680, that's going to be the battleground where the bulls need to hold. That's the 20 and 50-day moving average. Taking a look at the UK FTSE. Currently, right now, the UK FTSE is down about 43. It has broken through that 20-day moving average. This is looking like the short-term bulls are losing a little bit of control. Now, that's understandable if you've seen the action in both the metals and mining areas as well as in the commodity areas, specifically crude. Metals and mining right now in the UK under pressure, and the crude move has not helped the market in general as well. There is some concerns that maybe the growth factor isn't as large as what everyone has anticipated. And we've been trading a lot on hope and promise. Plus, you have a lot of political hotspots in France, Germany, as well as in London. Watch this area right here on the FTSE at 72.15. As a matter of fact, you can take a look at EWU. That's an ETF that tracks the FTSE that here in the United States. Watch this action here on the FTSE. A break below that level of 72.15. That's going to put the intermediate term bulls on edge. That could be a catalyst for the bears to maybe sink their teeth in and start challenging this area in the 7,100, 7,000 area. Finally, the French CAC. The French CAC currently has now popped into the green. And again, you're going to start to see this get a little bit more of a volatile trade, even though it's been consolidating here now that we know what the interest rate policy is going forward. We're going to watch China. We're going to watch Asia very closely, especially for France, because France does quite a bit of exporting as far as goods to France, to the Asian area. Let's see if this is going to impact it. But the CAC is up now $1.80 at 4,963. Actually now up 270 at 4,963.20. It's well above its 20-day moving average at 49.09 and its 50-day moving average of 48.53. This is the area, if you were looking to get in exposure into France, this is the area that you're going to watch here. That could be an area where if you're looking for exposure in Europe and specifically in France, that could be an area that you could start looking at building some potential positions. Also, some beneficiaries of the rate policies holding firm are going to be Italy and Spain. As a matter of fact, Spain and Italy are both up today. You can take a look at ESP as well as EWI. Those are ETFs that track both Spain and Italy. Rates staying low means that their continued repatriation of their banks and the financials actually lifting is going to be a positive for those two beleaguered nations right now. All right, folks, that is it right now for On the Open in Europe. I will be back at 9:30 Eastern Time. I'm going to be checking out all the action here in the U.S. markets. See you then.